Remember, please hit like and subscribe for me. Thank you so much. Okay, let's go.
Hi, everyone. Today is Thursday, August the 7th, and this is the Moneyball Morning Report for the Benzinga Pro platform. We're taking a look at the analysis that machine learning's done for the ES today based on volume and price action. We are in a buy the dip mode, but we are currently coming down into key support at 6,400. As you can see, trend is up, momentum is above zero, and so these pullbacks are going to be buy zones. Please remember that these arrows can go in both directions. If we fail this area, this becomes a double topping formation that will allow for a short if we've got a momentum cresting event and this candlestick volume here, which is at the beginning of the day, higher volume. Notice for pre-market volume, we have higher ranges. We can only see that when we isolate just the day. We can see that volume has come in this area at 64.10, right? That was the first break. And then volume came in again at this candlestick at 6 a.m. Eastern time before it rejected. So this could be an inventory retracement. And so the first thing we want to look at is, does it hold the volume weighted average price for the entire morning, or does it move down into value area low, which is also key support? That's 63.80. Right now, traders are trying to find a floor. I suspect they try to bounce right here at 6,400. I've put a chart up for you to notice when your volume areas start to peak. Pre-market volume is higher here. This looks like something happened in the Europe Open, pushing price higher. And then this one here at 4 a.m., which was the actual London Open, I believe. Okay, opening range, high 6,384.75, low 6,364. This is a buy the dip formation, but the dip could be steep. We had a lot of buying participation, but as you recall, from these days past, we also had a tremendous selling formation, okay? So what we have to realize is that we're caught in essentially a very wide chop zone. There's a young man on Top Step TV yesterday, I think his name is Tyler. He called these the interior points, and we could call them that very same thing, the inside of the big range. Sadly, this is where most intraday traders position. So we have to remember that we don't leave runners on in this kind of environment. Trailing stops, okay, but we trade from support to resistance, or resistance to support, and then back, because we are sitting in this noise. We had tremendous bearish volume, and now we're starting to pick up with a lot of bullish volume that came in here, and it has continued with accelerated motion. What's likely is that we come to the top of the box, and that's 64. Where's that at? 64, 65. That's entirely likely in this kind of market. Entirely likely. So dips or buys, first buy zone, 64.10, and then see where it goes. But you got to manage your risk. It looks like a minimum of 10 points between 64.10 and 6,400 if you're trading a 30-minute chart. If you're trading a tighter chart, you'll be able to clip that a little bit better. My thought is, let them come in to a solid volume qualified space of support before you engage in the long. All right, stare these areas down, give it a go. If it can't get up above 64.10, you've got a problem. I think 64.10 is a place to take profit anyway if you take it at 6,400. Anything can happen, folks. Absolutely anything in this kind of market. We also have job numbers coming. As I mentioned in a note, I do believe that the market is running front running the anticipation of lower rates. I don't have any idea whether that's true or not, but we shall see. All right, let's take a look at the NQU25. And of course, operator error was the reason that I did not get the appropriate levels for gold. Worked that out with TrendSpider, and that's all good now. Okay, so what are we seeing with the NQ? High at the opening range, 23,470, low 23,384. Let's see how much of the recovery it's had. A fair bit, right? It's now up at the top of the value area high for all of this heavy congestion. As we move through, if we just take the monster formation, we can see that we are out of the value area. So it's entirely likely that a breach and hold of 23,614 is going to give us a rise into 23,754. Last area of heavy congestion and inventory accumulation. Sorry, I don't smoke cigars, I promise. It's just my allergies. So now let's take a look at where the high volume areas are in the pre-market. Let's see if they did the same thing in this area that they did in the ES. All right. Wow, that's really big. Notice the same areas at 4 a.m. right here and 6 a.m. give us these zones. So I'm going to put the high of that candlestick right there. You can see they're trying to hold the low of the last high volume candlestick on the 30-minute chart. Dips or buys in this case, right? Old support, old resistance becomes new support. And then this line here is the secondary zone of high volume. That's 23,574. The volume profile is pretty tight. Look at that. It's shifting all over the place, but we are well above it and trying to create a base here. What do I think the best areas are? You know what? The dip. Volume weighted average price, that's 23,515, or value area high, 23,528. If you say to yourself, oh my goodness, why can't I trade short into that? You can, but you've got to find a formation that shows that that's a possibility. So do you want to go to a 5-minute and try that? You can't. Excuse me, you can. And if you do that, let's make sure we've got the right volume event sitting there. Interesting. You can see that you're under the, what is this, a 20? Yes. You're under the 20 exponential old support area. This is all inventory accumulation. If you cannot get above 23,602, you've got yourself a short into the next zone. So yes, you can trade in between. Just realize what's happening in the big picture and then go from there, all right, in order to manage your risk better. I like to record what's happening, and so I don't want to take 52 trades. Let's take a look at the YM. Opening range formation. Everybody's above their volume points of control. That's very nice. Opening range formation, high 44,366, low 44,249. What is happening here? See this big box? This is a breakout formation, right? They tried to sell it off here. Notice trend, up, momentum, up, sell it. They can't do it. That becomes a buy stop. Okay, and now they are moving up and trying to build a ledge right around here. Same pockets of volume. That 6 a.m. candlestick, that's going to be the one to watch, right? We breach it, there's going to be more upside, right? We break it, we'll look for support. And that is the breakout area at 44,476. If we lose it, value area high becomes the next support zone, and that's 44,373. And then finally, if we come down here, well, I have no idea whether we will or not, 44,135 value area low. It seems that certainly over the last several days, any dips below that have found buyers easily. If you try along here and it begins to lose, just get out. Take the $200 clip or whatever it is that it gave you, just get out, reframe, let it come back into the zone, make sure your trend and momentum are following along with you, and take the trade in the direction. All right. Oops. Let's take a look. Ooh, that looks like it's gone to the Z. Nope. Wow, we have got very thin volume in here. Let's go to MBT1. Let's make sure that this is a continuous contract. All right, let's have a look. Pretty big bounce up over the opening range of some prior day right there that we can see. At the top of the range though, right? Big congestion zone, several days wide. Look at this, 1, 2, 3, 4, 4.5 days breaking out. Notice buy stop areas, right? So the buy stop just goes long at the trigger and then runs into the zones. This is the high of the opening range on July 31st. That was the day we had really a pretty solid rotation in continuation across the markets. This chart is still moving up into the higher areas. Let me see what contract we're in on MBT. Q. We're in the Q contract. So let's look at Q. Oh, wow. It's still in August. That's very interesting. Okay. So, staring this down, we can see we're clearly at an old resistance zone, potentially a breakout area, right? Let's take a look at the pre-market volume. Big volume candlestick right here at 116,460. As long as we don't lose that zone, there's more price action up here, and these guys are on their way to retracing this entire rotation. Where's the high volume candlestick? That's this one right here, right? That's going to give us a potential target. Notice the volume point of control also agrees. This is a very high volume node. We've got a low volume pocket because this ran straight down, so it could run straight up. I think this is a dangerous area to consider a trade. Unless you're scalping, I would wait for price action to stabilize, for inventory to build, and then give us something of greater reliability. Since we are at the top of the opening range of the candlestick on July 31st, we could easily rotate back down into 116,455, where I think that is a potential buy zone, statistically speaking. The high of the opening range, 115,760, the low, 115,635. The point of control sits at the high of that opening range. I like that pullback area actually even better than this 116,455. You know, because I err on the side of caution, I would wait for the deeper dips here, but we really are in acceleration and we are carrying through a fair bit of volume. So that confirms early trend. So we'll see what goes on over there. All right, let's take a look at oil. So, interesting. Oil is, man, remember I said, hey, I'd like to do 64.60. Did not take it, and I'm really glad. However, this area at 63.65 is now starting to show a bit of bottoming. Very big value area in terms of the size of contracts sitting in the zone. up above 64.68 and 67.05. I actually like that. I'm going to put an introductory position right there. And let's see how much risk. I need to have it at the bottom of the volume profile. Okay. All right. So let's take a look at this volume. Let's check it out. Intraday volume formation, it's shorting pressure that holds the low. So as long as I do not lose 64.11, my pullbacks are going to make a potential buy zone that takes me up into the 66 area, right? I do suspect that this is a zone that gives us some upside pressure. In the long run, the opening range formation, fair bit of consolidation, almost 3 hours, and we tested it and bounced back. So this area really ought to be the stop zone. And I think that that's 64.11. Upward progression takes us to the top of the box. This chart is very sideways. It had a lot of selling volume, but just like in prior days and prior moments with oil, we are seeing reflexive bounces that sell again. So very sideways market. I like this area because it is the bottom of the range. I think the risk is relatively low, and the move up into the point of control at 65.60, not unlikely. We have the EIA report today. All right, let's take a look at gold. Gold has moved to the December contract. Yes, look at that. Now we get the right pricing because Anne-Marie actually put the right ticker in there. Look at all the volume here. This is a lot of outsized volume statistically for gold. And so the box of that high peak, 64.69, and the low is 64.45. Now you'll notice the traders tried to bounce off of that 64.45 area. They did a pretty good job, but breaking out the handy dandy Fibonacci, we can see that they're holding below the 50%. And you guys know that if we can't get up over the 50%, we tend to come back to the bottom. And so we did it here, and then we did it here. My thought is that if we lose this zone at around 3,440, I need to set an alert here. We are going to have ourselves another fade in gold. That will likely get bought. But the buying was really savage this morning, and it has continued. So my suspicion is that we hold the region that is 3440, and then we have ourselves another new consolidation area building. Lastly, let's take a look at SPY. SPY volume does not seem to be, there's no, there's a little bit. Look at that. Buying volume kicks in at 5 a.m., 6 a.m., 6 a.m., 5 a.m., 4 a.m. No, 6 a.m., 5:30, 5, right? So in this last hour, tremendous amount of volume, well outside average range, is sitting in a low of 636 and a high of 638. Holding 636, notice we could wick below. Holding this area, let's put the wick as the zone. Holding this area here, we'll be in good shape. Now notice, our drawing suggests we could come to the bottom of that box before bouncing, and that's actually 635. Okay, so I would be careful. I would let it fade, wait for it to bounce, let it get up over 635, and then you're off to the races. Otherwise, we've got ourselves, here was a long entry breakout, showed up again. Here's a long entry breakout right here. Remember, potential long entry if it breaks, otherwise it moves down. The pullback entry, everything's holding the short and the long. Now we have a long breakout, so pullbacks that fill the gap also will bring buyers to the fray. All right, a little bit messy. Trade the boxes. Whoa, I guess that's the employment number. No, that's something else. What is that? Did you see that spike with me? 8 o'clock. Nope, don't have it. I don't know what that spike was, but we'll see it soon enough. Take care, everybody. I'll see you on the streams.